Hey, what's going on? I'm David Sharpstone, mortgage broker and specialist in helping hardworking CIS subcontractors get mortgages without the hassle. So if you're working in construction and you're paid through the CIS scheme and you're thinking about getting on the property ladder or even remortgaging, then this is the video for you. So we're going to break down CIS mortgages, and that's everything that you need to know in a clear and simple way. No jargon, no fluff, just solid advice that can help you go from your CIS payslips to the keys. If you watch to the end of the video, I'll even explain to you how a CIS mortgage can save you thousands of pounds compared to a regular self-employed mortgage. So let's get stuck in. Right, you might have heard that getting a mortgage when you're self-employed is hard work. And if you're on the tools, paid through the CIS, maybe you've already been turned away by your bank or just avoided applying altogether. But here's the good news. You can get a mortgage as a CIS subcontractor. And not only that, you could borrow more than you actually think and get it done faster than most people realize. Let me show you how it all works. So first of all, what actually is the CIS scheme? So CIS stands for Construction Industry Scheme. So if you're a subcontractor in construction, your contractor takes 20% off your payments before the money hits your account. That tax then goes directly to HMRC. So technically, you're self-employed, but you're getting paid in a way that's more like being employed. It's kind of a hybrid. And this is exactly where it gets confusing for a lot of banks and a lot of lenders and a lot of mortgage brokers. What is a CIS mortgage? So a CIS mortgage isn't a special mortgage with CIS stamped on it. It's just a different way of assessing your income if you're paid through the CIS scheme. Instead of asking for 2 or 3 years of accounts like most self-employed mortgages do, some lenders will look at your recent CIS payment and deduction slips and then use your gross income to work out exactly what you can borrow. And that's a massive win because it means you don't have to wait years to build up that trading history. So if you've got steady work and 3 to 6 months of pay slips, you could already be mortgage ready. So why do people struggle with CIS mortgages? So the problem is not every lender gets it and not every broker understands it. So you walk into your local bank, tell them that you're self-employed, and boom, they want years of accounts, tax returns, speak to the accountant, get the letters, the lot. But those documents only show your net profit after all of your expenses have been deducted by your accountant. And let's face it, that doesn't always reflect what you're actually earning. So people end up being told that they can't borrow enough, or worse, they get rejected when really they just need to talk to someone who understands CIS pay. So let's look at CIS versus self-employed mortgages. Here's the key difference. With a normal self-employed mortgage, lenders assess your income using your net profit. It's usually averaged over the last 2 years. But with a CIS mortgage, we can use your gross income from recent payslips. That's the full amount before tax comes off and before expenses. So let's say you earn £180 a day. 5 days a week, that's £900 a week. Over 46 weeks in a year, that's £41,400. Now let's multiply that by 4.5, which is most lenders' minimum income multiple. And then you're looking at borrowing around £186,000. And just as a caveat to this, I haven't included any additional incomes from a joint applicant. And if you've got children or financial commitments, it will also reduce the amount you can borrow. But either way, it's still a lot more than if you were assessed based on your self-employed profit after expenses. Can you get a mortgage with less than a year on CIS? Yes, you absolutely can, because some lenders are happy with just 3 months of CIS payment and deduction payslips. And as long as your income is consistent and you can prove it, you don't need to wait for years of trading history. If you are already working in construction before becoming CIS, that also helps support your application. And we just need to show that your work and your income is stable. Do all lenders offer CIS mortgages? So not all lenders are on board with this CIS approach. Most high street banks still treat you like a standard self-employed case, which means more paperwork and lower borrowing limits. And this is important. there are lenders who do accept CIS gross income, and a specialist mortgage broker is likely to know which lenders do accept CIS income and those that would be a complete waste of time. So going direct to your bank might actually limit your options, but going to the right broker opens up more doors. How is income assessed for a CIS mortgage? So for a CIS mortgage, your income is usually worked out based on an average of your last 3 to 6 months pay slips. So let's say you're earning around £180 a day, 5 days a week, and you've got consistent pay slips to prove it. Lenders can work out your yearly income and base your mortgage on that figure. And remember, they're using the gross figure, not what hits your bank after deductions. So what are the top 3 benefits of a CIS mortgage? Let's break down the top 3 benefits. Number 1, there's going to be less paperwork and there's no need for years and years of accounts. Just your recent pay slips and the bank statements will be sufficient to prove your income. Number 2, you're going to get a higher borrowing power. Because we're using the gross income, you can often borrow more than you would with a standard self-employed mortgage. Number 3, faster approvals. Because if your paperwork's in order, things can move quickly. And I've seen people go from application to mortgage offer in just a few days. What are the deposit requirements for a CIS mortgage? So you don't need a massive deposit. Most CIS applicants can buy with as little as a 5% deposit. But of course, if you've got 10 or 15%, that's even better because it gives you access to better rate and more lenders. And yes, gifted deposits from parents or relatives are usually fine as long as we can show it's a gift, not a loan. Are interest rates higher for CIS mortgages? Well, that is a great question. And no, not necessarily, because if your credit is solid and your deposit is reasonable, you'll often get the same rates as someone who's fully employed. The difference is how the lender understands and assesses your income. It's not about being penalized for being CIS. It's about finding a lender who gets it. What documents do you need? So, to apply, you're going to need 3 to 6 months of CIS payment and deduction statements, 3 months bank statements showing that the income is going in. You're going to need to prove you are who you say you are. So that's ID and proof of address. You're going to need to prove your deposit. And sometimes you're going to need your UTR and your CIS registration. And if you've got all of that ready, we can get things moving really fast. So can you get a mortgage on CIS with bad credit? Yeah, having bad credit isn't the end of the road because I've helped lots of people with defaults, missed payments, even CCJs get mortgages. It all depends on how recent the credit issues were and what your current situation looks like. So if your income is solid and the rest of your application is strong, there are lots of lenders out there who can still consider a CIS mortgage for you, even with bad credit. Can I get a CIS mortgage with someone who is employed? All right, let's tackle a really common question that I get all the time, which is, I want to get a CIS mortgage, but I'm buying with someone who's employed. And the short answer is yes, absolutely. In fact, this is really common. You might be a subcontractor and your partner might be employed full-time with a payslip, a salary, and a P60. And that's totally fine. We can still apply for a joint mortgage together, and both incomes will be taken into account. Now, here's the key thing. The lender needs to understand both sides of the application. So they'll look at your partner's income in a usual way, that's using their pay slips and employment details, and then they'll assess your CIS income based on your gross earnings from your CIS payslip. And as long as both incomes are stable and we've got the paperwork to back it up, then there's no reason why we can't get you a strong mortgage offer using all the incomes. So in fact, combining incomes can often help you borrow more than you could on your own, which is great because if you're trying to stretch that budget a bit further or afford a bigger place, this will make it a little bit easier for you. So let's just make sure you're working with a broker who knows how to present a joint application where one of you is on CIS and the other is employed. Because trust me, not every lender looks at these cases the same way. Can you use CIS with affordable housing schemes? Well, absolutely. If you're looking at shared ownership or right to buy or other affordable housing schemes, we can combine that with your CIS income as long as the lender supports both. So don't rule yourself out just because you're looking to buy using an affordable housing scheme, because there's still great options available. What if you're a limited company director? So if you're a limited company director, your income is usually assessed differently. It's normally based on your salary and your dividends. But if you're registered under the CIS or your company's registered under the CIS and working as a subcontractor through your own limited company, there are some lenders that will still calculate the mortgage amount from your gross CIS income. And a specialist broker will review both routes and figure out which option is going to give you the best income, because it's not a one size fits all, but that's why good advice really matters in this situation. So here's some final tips to boost your chances. Number one, keep your income consistent. Number two, make sure CIS payments go into just one account. Don't open up new credit cards or loans before applying. Number four, keep your payments and paperwork tidy. Number five, check your credit report before you apply for a mortgage. And above all, speak to a broker early so you know exactly where you stand. Okay, as promised, let me show you how a CIS mortgage can literally save you thousands of pounds. So let's imagine this scenario. You go to the wrong bank or the wrong broker and they say to you, right, we're going to assess your income from your profit on your tax returns. Now, if you don't know any better, you're going to assume this is the only way. So what do you do to maximize your income? Well, you'd probably normally ask your accountant to leave out some of your business expenses just so you can have a higher profit for the mortgage application. And what is the massive issue that this is going to now create? Well, you've got it. Bigger profit means a higher tax bill. Now, I'm not suggesting for 1 minute you should ever do this, but I know this goes on. I'm going to potentially save you thousands of pounds here by telling you this. CIS-friendly lenders do not care one little bit about your self-assessments because they're going to assess your income from payslips. So go ahead and keep your profit as low as you can and save on the tax. You might even find that the money that you save on tax will now go towards a bigger deposit on your next home. So why does it matter to work with a specialist mortgage broker? Well, this is where I come in, because when you work with someone who understands how CIS income works and they understand all the nuances with CIS, you avoid the stress, you avoid the guesswork, and you avoid the computer says no moments. Because a good broker is going to know the lenders who say yes to CIS. So they're going to know how to present your case the right way, and they're going to guide you from start to finish so you can focus on your job while they focus on getting you the keys. So if you found this video really helpful, give it a like, drop a comment below, and don't forget to subscribe for more CIS tips. Thanks again for watching, and I'll see you in the next video.